Hello and welcome back to Explain the Charts. Today, March 21st, 2025, we are going to analyze the SPY S&P 500, focusing on recent news and how it correlates to the charts. First, let's take a quick look at the top market headlines based on recent Google searches. We're seeing mixed sentiment, with futures slightly down as the S&P 500 tries to end a 4-week losing streak, a streak attributed to trade policy uncertainty and recession worries. Powell's transitory comments on inflation are still in the headlines, and futures are surging as the Fed signals 2 potential rate cuts in 2025. We're also seeing news about individual companies like FedEx and Nike, with earnings outlooks impacted by tariffs and weakened consumer confidence. Now, let's shift our focus to the charts. We'll start with the daily chart to get a broader perspective. Looking at the daily SPY chart, we can see considerable volatility over the past several months. There were rallies followed by pullbacks. We'll need to examine specific price levels and patterns to understand the current market sentiment and potential future direction. A key level to watch is around 560, which acted as a significant support area recently in March 2025, after a more significant drop from 580 during the end of February and early March. A break below 560 could signal further downside. On the upside, breaching 570 would suggest a bullish reversal. The daily trend gives more confidence in short-term predictions. Now let's switch over to the hourly chart. This will allow us to narrow our focus and look at the short-term patterns. On the hourly chart, you can see more clearly some of the support and resistance levels from the daily chart. The levels are roughly 560 acting as support and roughly 570 acting as resistance. This shows some short-term volatility on both sides. Looking at the news headlines, the uncertainty surrounding tariffs could be contributing to this volatility. Companies are hesitant to commit to capital spending and hiring due to potential trade wars and shifting Fed monetary policy. Tesla's stock is also a headline, analyst Adam Jonas trimming his price target due to weak auto deliveries, suggesting investors remain cautious about some sectors. Now, let's dive into the 15-minute chart for even finer-grained detail. Here, we can analyze more recent price action and identify potential entry and exit points for shorter-term trades. On March 19th, we can see it reached 570 resistance before plummeting down again. It did the same on February 28th. This confirms our prediction of the resistance at 570. In summary, the S&P 500 appears to be facing some resistance around the 570 level, and the 560 support appears to be holding. A decisive break above 570 on the daily chart, especially with strong volume, would signal a more bullish trend, driven perhaps by positive reactions to future Fed moves. I'd give that a 40% likelihood. If the price breaks below 560, we could see a test of lower support levels, potentially around 550 or even 540. I'd give that a 60% likelihood, given the recent downward pressure related to tariff concerns and potential recession fears. This is further reinforced if other company forecasts become lower. Keep an eye on upcoming economic data releases and any announcements from the Federal Reserve, as these will likely have a significant impact on market sentiment. Also watch individual companies and their statements and forecasts.